So we arrived to the last part of the journey, and nearly we finished the assignments and assessment of the company, and we did the problem identification at the beginning of the semester. Then, based on this, we created the product design, which defined the profit and loss statement for the company, at least our expectations about profit and loss statement, and after that it determined the potential value of the company and this strategy, and also we checked the probability of default in this case, and after that we realized that which funding source would be appropriate when we were assessing bond issuance, bank loans, share issuance, and in my specific case equity was preferred because it was better. And after that we checked also the potential impact of foreign exchange risk, and in this case my problem was mainly that we have US dollar revenues, and in this case I'm motivated, or my strategy will be better performing if there is a depreciation in the euro. So this is what I had to assess. So I had created the different scenarios in case of the forecasts with many different approaches. So at the end of the day I was using this GART simulation because in this case I had worst case, best case and expected scenarios, and on this basis, after that I was able to check the usage of derivatives with Garman-Kohlhagen and Heston option pricing, and then we were able to see that, okay, in my case it was necessary to use hedging because I had some volatility. Without hedging and with hedging I was able to cut down the potential volatility of the share value under different exchange rates. So this is where we stopped, and now it's time to talk about the last assignment. So let's start anew, and this is tax optimization. Assignment 5. So the key problem is again the same because we have this. So somehow, as our guest lecturer yesterday told us, or invited lecturer told us, that someone should do the counting. We cannot write numbers and receive any transfers without proper accounting. So this is the initial problem, that we will launch satellites for a US company at this price. And the question is that should we collect this immediately by our French company? So should we immediately, and of course immediately French company to pay the corporate income tax rate? So what kind of approaches do we have? So first of all, obviously we have to see that foreign taxation strategies can be applied, and the other is CIT in different countries. And after that, the situation would be much more complicated if I would have US dollar denominated engines, so if I would not use the legacy engine but other things, because in this case I should also pay license fee, or I could pay license fee or something like this, which could be also the basis of such shenanigans. But right now this is what I have, so yeah, next semester I will be more careful. So okay, so tax, yes, worldwide tax summaries online. No, not this, this one. So PVC has this really good database which collects different countries' corporate income taxes. So if you are go for France, then we can see that if we are in terms of turnover, where are we? So the threshold is 250 million. Yes, we are above, so okay, we have to pay the highest. What? Okay, doesn't matter. So right now we are after 2022. So okay, we have to pay the 25% of CIT. Okay, it's not for small enterprises. So we can see that so this is the same since 2022. And after that, we can check that, okay, if... So what happens if we are creating a foreign company which will be responsible for collecting revenues from foreign entities, and then we transfer some of the money, but we are keeping it there. So obviously, let's say the US, because this will come from alternative minimum tax, S corporations, gross transportation income tax. What? Okay, I know that this is the United States, but okay, states generally range from 1 to 10%. Also, some states impose no income tax. Maybe this will be easier than I was thinking. Okay, so the US tax reform legislation enacted last decade permanently reduce the tax rate. They had 35%. Oh my god. Okay, so 21% of tax rate. This is not that much win. And this is still the federal tax rate, unfortunately. So US taxation income earned in the non-US persons depends on. Okay, we are not talking about US persons. So we can't save much. Certain US source income, interest, dividends, royalties are not effectively connected with the non-US corporations trade of business, continues to be taxed as a gross basis of 30%. Okay, but this is US. A source. So this is no problem for us. Okay, minimum tax act is not affecting us because right now we are trying to use the US as a tax haven, which is maybe not the brightest idea. Okay, there is 0. So we can see that. Because right now we can win only 4% on taxes, which is not the greatest. So let's go for some traditional tax havens like Bahamas. Or Barbados. Companies resident in Barbados are taxed on income earned from all sources whenever gained within or outside Barbados, less expenses incurred in purpose of producing assessable income in fiscal period next to it. 1 year. Non-resident companies are generally only taxed on income derived from sources and operations conducted within Barbados. Yeah. So we can see that if we are non-resident company, we will be taxed only on the income which was done by duty operating in Barbados. So if we are just collecting our funds there, then we should not pay anything. Then let's see the taxation. So all companies except those that meet the below criteria, companies that are members of a multinational enterprise group with an annual consolidated revenues of a lot of euros or more. Do we fit? USD revenue in euro. And yes, we are. We are definitely above this threshold. Or more, whose ultimate parent entity or intermediary parent entities are located in a jurisdiction that has not enacted pop-up tax legislation. Whatever, so we have to pay 9% at the end of the day. It's still better than 25. Okay, companies registered as approved small businesses. We are not small businesses. Not international shipping businesses. Can we register a shipping business? We are shipping stuff to space.
Yeah.
It's okay. It's horizontal. But after that it became vertical, just you have to go up for several hundred kilometers. So why nobody used this loophole yet? Okay, insurance companies. That would be also nice. Intellectual property rights. We could exploit this one as well. But okay, so let's use the old-fashioned ones. That Barbados. What do we know about Barbados? This is in the Caribbean. It has a flag, and this is located here. So, which is really good because it's close to French Guiana, which is our launch site, and hopefully all the debris of our launches will drop into the ocean here. If we are unsuccessful in launches, not there. So they will be not angry. Once NASA was fined by Australia because Space Lab, the station, was dropped, unfortunately, on Australia. So for public littering, they fined the space agency during the 80s or late 90s or late 70s. Yeah. So in Barbados, we could choose other sources, but right now let's say that, okay, this one is proper. So source of data. Thank you, PVC, because in the past we were using KPMG's database, but unfortunately somehow they discontinued this. So after 2020 we don't have any data, or yeah, so which is sad. They are not supporting my tax evasion schemes anymore. Yeah, so if we are an ethical multinational company, let's see that what we can do here. So practically this is what we talked about already. So our strategy in the case of the USD revenue. So we are creating, we can create subsidiary in Barbados to collect the launch fees from Amazon, from the Amazon Kuiper contract, and then still we should pay something for the rest of the company because we have expenditures yet. So so what we can see here that yes, my unit price is this one, but I can go at lower level because manufacturing costs should be only covered here. So what is the lowest level where I can go? Practically this Yes. So this is my, if we are expecting that we can reuse the first stage and so on, and we can manufacture them multiple times. So this should be the manufacturing cost, theoretical manufacturing cost of the vehicle. So we can say and pay only average theoretical. So for me this is this. Let's be generous, let's add an additional $500,000. The parent company, which means that in the first year 2015 we have to pay this one, and then we have to give 70 multiplied by 29, 419 million euro in 2029. So we are paying to cover the raw material costs and the manufacturing need and the fuel and so on, but the rest of the money will be kept in Barbados in some interest-bearing assets, and after that, when we are finishing with the accumulation of these funds, so in 2024 we are selling the assets, transferring back the revenues, and we will see what happens. Maybe it will be completely useless. Then the profit will be invested into US bonds until the problem is that we have to sell it, so we must liquidate our position to include it into our business plan. In real life, we could keep it longer if we have more revenues in US dollar in the future, so we could drag this money with us without any temporary limit, but right now the case study is forcing us to sell it. 24, when the bonds will expire and the profit will be, no, there is this, there is a specific phrase for this one when they are returning the profit, but okay. Yeah, so this is already borderline legal, but according to the standards we can do it. Obviously, no, I don't recommend to do this at home. Just hi. But still, we should test it. So Barbados. We are defining the fiscal years. And also we are defining that how much money can be earned. USD 0 multiplied by 0, so it's 0, and after that we can see that this is how much can be earned. Okay, then expenditure in euro, just to make things easier. Then number multiplied by the unit price, so the average. Then it goes through. Oh, yes, and then I should fix this one because otherwise it starts to work around. Yep, but still we have to convert this to euro, so I should bring what is my exchange rate? Yeah, FX exposure sheet is there. Okay, let's just use only the expected rate. I don't want to overcomplicate things even more. So we are already buying the options for the existing things. Okay, so expected exchange rate. And then we have to multiply. Necessary. Okay, so these are all our expenditures. Maybe we should say that, okay, we should spend some money on lawyers. So lawyers and other expenditures. First we don't have anything, and then let's say that we have to spend 10 million US dollar is way too generous for such services. For I'm not so good in money laundering. 5. Okay, let's say 5. After that we can test it, that is this proper or underappreciating their services. So we have to do it for 4 years, and then we can see the EBIT. So no, not this one, not this one. We have to take the revenue minus expenditure minus lawyers. And this is expenditure in US dollar because now I converted it. So this is how much money can we generate. Then in interest, we must calibrate this one, so we have to define interest rate, and after that we can say that profit before tax CIT in Barbados, which is 9%, and then profit of the year. And after that we should also define that this is the US government bonds. So we have a really simple balance sheet. And also we need the okay, and this is the tricky part, because how can we define the interest rate for the United States government bonds, since we don't have much data. So USD okay, we got cookies. So in this case we can use forward curves. That so what right now when people are making forward contracts or future contracts, then on the currency market you can trace it back, that if you are assuming that forward exchange rate, so which will happen a year later or 2 years later, is practically behaves like a bank deposit. So we have the exchange rate and we have to multiply it with 1 plus of a theoretical interest rate. And in this case, they are just tracing back this theoretical interest rate, that, okay, based on the current exchange rate, what should be this theoretical interest rate. And this is what we can see here, that for different times we have different interest rates. So at the end of December, okay, so for which year do I need this? For 2015, yes. So annual, and these are annualized interest rates. So which one to choose? Obviously, I cannot choose 5-year treasury bonds. It would be a great idea, just we can't do it because it's too long in terms of maturity. So I would prefer 4-year-old, just we don't have such a data. So let's go with the available 3.86%. So this is percent, not much. Then for 2000, okay, sorry, this one is the other one. 3.79. $3.74, and the last one is no, it's not good. 17. Yeah, okay, then that's good. Okay, 2017. So, So right now we have some kind of an educated guess that what can we expect in case of interest. So if we are earning some money, so right now what we have here, we cannot gain interest because we can get this at the end of the year, so we don't want to create loops around. So right now gained interest is 0, even if we have the data right now. Then profit before tax plus this one, then this multiplied by the 9%, and in this case we are fixing it, and after that profit for the year will be this minus this, and all this money will jump into government bonds which is this in the portfolio. So in the next year, we can see that the gain interest will be this number multiplied by this number, because this is the number at the end of the year, and of course we should. Now this is interest revenue, so it's good. So we earn 1.5 million. Okay, the rest is the same. CIT rate is the same. Profit of the year is the same. And then we can see that now we have this amount of money plus this amount of money, but it already paid. No, we are not multiplying it. So, okay, we are adding this, but already we have the gain interest here, so we have to pay the tax. But after that, it will be quite simple. So this will happily grow. I have to drag this one, then this one. So hopefully I did all the cross-references well. So at the end of the 5th year, okay, this is not fast growing because we can see that, okay, the gain interests are realistic, so there is no hiccup. So we paid interest, we got the interest, we paid also corporate income taxes, so we are not money laundering, we are not tax evading here at all. We are absolutely an ethical multinational company which has good ESG scoring. So then we have to sell this and bring it home, and now we should prepare the company to collect this one. So okay, we can say that this is 0, this is 0, so now it's removed from the equation, and then repatriation. What is the repatriation? Yes, return of someone for the current country. Yes. So repatriation of the profit will happen, and okay, I will. Maybe this is the easiest way. US dollar revenue in euro. To utilize this one, or large expenditures, paid financial lease. Or should I increase this one? Maybe this is better here. Okay, so in this case, probability of gaining revenue, nothing like this happens. USD revenue in US dollars, so we are taking this number and then we are converting it back. So we realize. Let's use profit repatriation, and after that the problem is that once we are repatriating the profit, still we have to pay the French corporate income tax. So in this case this will be taxed. The question is that which one is better, to pay the 25% for all the time periods, or to collect as much interest payments with lower CIT taxes until we should repay this. So what is the turnover here? And also in this case, we are happily employing some local people. So we are even improving employment in Barbados. So it's obviously local lawyers are used.
Professor, we are doing business in Barbados because of the tax advantage?
Yes, only. So that's why we are focusing on the tax havens. And if you are checking the lecture notes, this is how people are doing it. So the problem is that in many cases, these schemes are defined for operations in the European Union. So if we would be a US company, then it would be much easier, because in this case, just we would create an Irish company or a Dutch company, which would collect all these funds within the EU, and after that wouldn't pay anything because they can have tax residency in foreign countries, so their tax residency would be Barbados in this case, and they would pay just the CIT of the Barbados tax rate, and after that they would repatriate it in the US.
And there is no cost of repatriation of the revenue?
The wire transfer fees and closing the company.
But the government won't charge anything?
No. Or government will. So in this case, since this will be accounted as a revenue, then we have to pay the French tax rate after it. So
it will be profitable, like we are paying there 9% and also the corporate tax of France. So together it will be something.
Yeah. So the last year is not optimal at all. The question is that what is the trade-off to not pay all the taxes for these 3 years and then to pay the tax here, or not to do anything, or also maybe we can. Yeah, but I don't want to create extraordinary expenditures here by transferring this money home, because we could say that suddenly we have to pay for the know-how, because this is also what is made by Uber and Google, according to leaked documents, that they are paying 95% of their revenues, what they are earning in Europe, as a royalty fee towards the parent company. Just this money stops in Barbados again, or Cayman Islands, or whatever place. So practically they are generating artificial expenditures, and so we could do also the same thing, that suddenly we will pay for the usage of the bench or trademark of the company, using the name and the know-how and so on, and we could remove majority of these funds located here. So in this case we should put this one here, and in this case we should not pay the CIT rate compared to this scheme here, but that would be even more terrible. So let's start. Let's see that what was the impact of this monstrosity, and then we will see that what happens. Because yes, right now experts would say that this one is not so efficient. It's borderline legal. We can say that this is completely illegal what I'm doing here. I think that tax authorities would still knock on my door. Please don't. I don't have this money. But yeah. Okay, so our strategy for the US revenue. We have this. And after that, let's see the implications of value. And so make this legal. Okay, so implications on corporate value. So if we are just checking valuation, what is happening here? Value, sorry, with Barbados. And the question is that how can we add Barbados to the valuation? Usually companies are blind to this. Or because in this case we should also add Barbados to the valuation, but how can we do this? So right now let's say that okay, it's not recognized. Without Barbados. Okay, we should check the results from the valuation. Where was the value? There is the value. Okay, so we should pick up, because at the end of the day I was choosing to use Heston or one of them. Did I? You have to follow the options. We are not hedging, yes. Therefore, the management chooses total hedge as the 7 million euro exposure in the first year mitigates the risk. So, okay, let's go for this. Or I will just highlight that. Okay, it's coming from here. So we can see that if I was removing the money to Barbados, then corporate value would drop. Because right now, in the valuation, we are not recognizing it that we are owning this company. So it would be much better also to create a valuation for this one. Yeah. So. Okay, in this case, we can create a subsidiary. The question is that how much money should we put in as an equity? Only paid in equity capital. Because usually there is a minimum equity limit. But I think that 1 million euro will be enough, usually. Okay. Valuation for Barbados. We are quite simple here because we have to define the value of this cash. And in this case, what we have to define that what is the weighted average cost of capital. And in this case, we can't use the parent companies because the parent company combines debt with equity. Okay, mine is mainly uses only equity, but at least I can use the expected rate of return. So we don't have debt in Barbados, so I can say that. Let's pick this up. And after that, I can also say that the value of this whole company is what is produced here. So at the end of the day, this is salvage value only. So because so the whole value of the whole Barbados company is the asset, not its ability to generate money. It's not generating anything, it's just collecting interest rate or interest payments. So we can say that it's quite simple. Let's take this value and divide it by 1 plus the interest rate, and this will happen 5 years in the future, so we can see that. Okay, and now we can say that by recognizing Barbados's value, still we are under. So not just absolutely unethical to avoid any taxation, but right now my scheme is also not good because our value will not grow. And then let's see that probability of default. How does it react? If people ask you that what we are doing at this class, you can say that I'm highlighting the necessary of ethical operations in finance because I can prove you that tax evasion or tax planning is not yeah. Now money laundering is illegal. This one is legal because we spent on lawyers. So. If we would do money laundering, it would be much easier because we would just have to sell this as something else. So in this case, we would just use it as a shipping company and then rent out some boats and then use this use the same boat for the French company's operations to deliver the rocket components to the launch site, and after that we would invoice it, and then we could keep the rest of the money. So it would be much easier. This one is, since we have to maintain the legality. Yeah, probability of default is this. And then let's create values and charts, and also we are not politicians, so we should say that okay, the minimum level is 0, not close to it, because in this case we can still see that the ratio with Barbados and without Barbados, so we can say that yeah, it's without Barbados it's better. Since the value is coming only from its asset, from the US government bonds in the portfolio are only the equity to compute the okay, and this in this case the salvage value was this number. Oh, but this is still US dollar. USD? Okay, so still have to convert it to euro. I nearly forgot this step. It's slightly bigger. So still the parent company's value drops significantly due to the missing revenues. So not missing revenues, redirected revenues. So the second and third business year. And also this is the problem, or not problem, so the effect of present value calculation. So we can say that, okay, but we will get even more money back in the 5th year. Just it happens in the 5th year, not in the 2nd and the 3rd year, which means that when we have to recognize this one during the valuation, its value will be way lower because of present value calculations. So at the end of the day, this scheme is also flawed because of this. Which is not compensated by the excessive revenues in the 5th year, and the profit repatriation happens. Okay, so we have the value here, and also the same thing happens in probability of default, so we can see that this harms the company because it slightly increases the probability of default, and that's why not the greatest idea. Okay, we can say that yes, but can we make this better? So what happens if there is an increase in the interest rates in the future? So let's say 8%. So is here any value? And still we can see that no, Barbados is still not good enough. Then 16%, no, 24%. Come on, if this happens in US dollar, then we have other troubles than just paying corporate income tax. $70. Okay, so we can say easily that there is no scenario where this can happen. Yes. So if we can get this will be obviously not US dollar government bond, but if we get an investment portfolio which generates us 90% annually as an as a return, then we can have the same valuation like not doing any of this. So maybe we should not do this. Okay, so it's not just our generosity, so if you would just pay nothing at all on your lawyers, because our lawyers can do this, we would still in bad shape. So conclusion. So we are consider ourselves unethical company which pays taxes in a proper manner. So we are not just ethical on paper and when we have to define our ESG scores, but also in finance, that if we are using the support of the country and its people, then we should give back some part of our profit in forms of tax payments. So that is why we will not use the above mentioned scheme. And this is always a problem. So how can you define the fair value of the company which keeps a lot of money abroad? So sometimes we are talking about the size of a GDP of a small country. That should we recognize this? Should we recognize this at a reduced level? So what would happen if it would be immediately repatriated to home, and we should reduce it with the parent company's CIT rate? So it's not just a theoretical problem, but also a practical problem. And the other problem is that obviously, since they are avoid taxation, corporate reports will be not honest in many cases. So maybe they are excluding, because this happened with Walmart, that when people started to dig into the Panama Leak documents, they realized that Walmart submitted some reports to the SEC in the US that how many foreign subsidiaries do have, and after that these people were able to find way more than it was reported. So in this case it can happen also that we are underestimating the value because we can't recognize this asset portfolios abroad, and which is still better to not recognize it, because in this case we are too conservative, so not way too optimistic in terms of valuation. Just it's not just an ethical problem, it's also an analytical problem for us. Okay, so that was the fifth assignment. So if we are checking code space, then also we can see this tax optimization assignment, which will be due in the last week of, we should put it here. Last week of December. So after reorganization, the company will have the potential generating of some million pre-tax profit after, and Okay, so how can we increase the efficiency of its money generating process through optimized taxation? Let's compare the original offshore strategy. With the following interest rates. So the two alternatives can be compared via present value annuities. Please compare your results. So the same thing what we did.